Hey, what's up guys? Welcome back to the channel. Now, as you can tell by the name of this video, this one's gonna be a little bit different. We're actually gonna be talking about how I plan on making millions of pounds when I'm an old man by doing nothing and just sitting there. So this video is going to be about my strategy with investing, how I sort of structure my investments year on year, and my results from my first year investing and what I actually achieved. Now I have two different portfolios when it comes to investing. I have my sort of safe portfolio, which is in my ETFs and sort of my ISAs across, the S&P 500, all of that good stuff. So my other strategy is obviously buying individual stocks, which is a little bit more risky and it takes a little bit more time. I've got to read about the individual companies and kind of make an educated decision on where I want to put my money.
I understand nothing.
But today I want to be talking about ETFs in particular, why I'm putting money there, what I'm hoping to achieve from that, and why you probably should be looking to do this too. Now, before I continue, I need to let you guys know this is not financial advice. I'm no expert. I'm barely an expert in anything. Actually, I'm an expert in keeping fish tanks, all right? But not financial advice. But hopefully you can learn from my experiences and make an educated decision yourself and decide whether it's something you want to do. I'll give you a little bit of a rundown. I wasn't investing in any stocks or ETFs a year ago. I was actually just putting every single penny I had into online business, growing dropshipping stores, running theme pages, trying out everything and kind of just spending here and there just to make some money. Although this was great, unfortunately with the online business world, nothing's guaranteed. You may find a store tomorrow and for the next 20 years of your life, it's going to be running perfectly and you're going to be selling Donald Trump toilet brushes successfully every single year from now on. That's just not the case. So there needed to be something in place that kind of gave me a little bit of safety, and it was kind of like my safety net and gave me a little bit of financial structure to my life, right? So I'm personally not that savvy when it comes to numbers and it comes to reading really in-depth detailed reports and analytics about individual companies and this sort of thing. That's just not how I work. I prefer to learn by going on YouTube, which I'm assuming you guys are doing right now, and watching visual things. My brain's very, very simple, kind of like Patrick Star.
You may be an open book, SpongeBob, but I'm a bit more complicated than that. The inner machinations of my mind are an enigma.
But we're all good. So luckily I've stumbled across the platform Vanguard after watching many hours of videos on YouTube, people that are into like finance and that sort of thing, watching their videos and kind of seeing where I should be putting my money and how they structure their sort of portfolios. Vanguard is a huge company that allows you to invest in different ETFs. They actively manage. The benefit of an ETF is instead of it just being one stock, you invest into multiple companies at one time. So it's very, very diverse. You're not putting all your eggs in one basket, like chucking all your money in Facebook. Instead you can buy into the S&P 500, which splits you across the 500 top companies in the USA. So that is what I've been doing, and so far it's been pretty good. I'm in my first year. You actually have a £20,000 ISA allowance every year in the UK, which allows you to invest £20,000 tax-free into this ISA, and any profits made are actually tax-free too. So when it comes to pulling all that money out, I'll be a rich man, and I'm not going to be paying anything to the tax man, which is an added bonus. So initially I started out investing, £500, £1,000 a month, and as online businesses start to grow and develop and I have more spare cash, I started putting more in just to ensure that I could hit that ISA allowance by the end of the year of £20,000, right? So as I'm recording this video, I'm about 9 or 10 months into my Vanguard journey. We're very close to hitting that ISA allowance and max myself out for this year. Now, the best thing about these ETFs is I don't have to worry, it's not like the stock market where I'm sat there and I'm watching the stock of Neo go up and down, up and down, up and down. And I'm like, shit, maybe I should pull some money out and put it elsewhere. Instead, with an ETF, you buy and you just hold. It's not about timing the market, it's about time in the market. Stolen from Graham Stevens, you can let him know yourself. But yeah, that is how it works. I'm not looking to pull this money out in a year's time. I'm looking to let the power of compound interest ride it out until I'm like 50 years old, or until I come to a spot in my life where maybe I need some money. But this is my safety net. This is going to be my bank for when I'm an old man and I want to buy the Playboy mansion and live it up like Hugh Hefner, right? So I actually want to jump into my computer and kind of give you an overview on how compound interest works and just show you the power of it, because you could be be putting in and maxing out your ISA every single year, £20,000, £20,000, and all of that money just gets reinvested back into them ETFs. So what ends up happening is over the course of 10, 20 years, all of the money you've made off dividends, all of the money you've made off for the interest gets reinvested back into that pot, and you just keep on growing. The money just keeps on piling up and multiplying, right? So on average, for the past 90 years, the S&P 500 has shown a return of around 10% per year. Now, obviously, some years that fluctuates and it could be down 20%, but then the next year it rebounds and it's up 30%. So overall, it averages out to be 10% per year. And obviously that proves the point of staying in the market and not selling short term. You know, it's all about holding and ensuring that you're there for the long term on this one. Let's jump in my computer and I'll go over this website that I use for compound interest, and you can kind of get an idea of how powerful it is and why you should be using it. So this is the website that I use to kind of calculate compound interest. And this was the website that I first used that kind of blew me away and showed me the power of it. It's pretty nuts. You can look at a couple of different outcomes and see what happens when we put in these different figures, right? So obviously I'm in the UK, I'm working with GBP, so I've set my currency to GBP. My initial deposit, let's just say I'm starting out and I'm putting £1,000 in a month, right? So like I said, on average, we can expect a 10% return if we're investing in the S&P 500 year on year. So let's just play it safe and we'll say 8% here. And we're gonna hold this position for 30 years and we're gonna be compounding monthly, and every single month we're going to be depositing another £1,000. Now obviously that would bring us to £12,000 total per year that we're putting into these ETFs, and that is our investment pot. So let's see what happens and how much money we can be expecting to make from that. Here we go. So first year, £12,000 interest, we would make £532 in total interest. Now this is where it gets crazy, right? This is where we're going to start seeing that interest figure just blow up and just keep snowballing. So look, if we skip forward to the 10th year, right, we've been putting 12k in a year. Our total investments at that point would be £121,000, but our total interest made is now £64,000. So that's pretty much 50% of our total investments. Now, obviously that interest gets put back into our pot. If we go to the 15th year, we're still putting in that 12k a year. We put in total 169,000 into this fund, and we have now made a grand total of 142,000 in interest alone. So if we work this out even over a 30-year period, you know, I'm 26 now, so I'd be 56, which is a scary thought. But I would have ended up putting £360,000 into that fund, and total interest earned would have been £1.1 million. So I've literally 3x my money there just by being consistent and putting in this figure each and every month. Now, I understand £1,000 a month could be a bit out of reach and a little bit of a crazy idea, and you know, it's probably not an option for everyone, right? So let's set this to £250 a month and we'll see what happens. So our initial deposit will be £250, and we'll do it for 30 years still. So our total monthly deposits would have been £90,000 over the course of 30 years. Our total interest earned would have been 285k, and our investments are now worth 375k. So even if you can just afford to put in a small figure, even if it's £100, £250, £500, you know, as long as you're doing it, you've got to be in it to win it, right? And it's pretty much how the rich stay rich. You know, they invest into these big funds and they get a percentage return every single year. Now, obviously, I'm maxing out my ISA every single year. So that's 20k allowance. So I'm doing 20,000 divided by 12, 1,666 a month. So this is how we're going to do it. So my total investments over the course of 30 years is going to be just under £600,000, right? This is obviously assuming that I can continue putting in £1,600 a month into this fund. But at this moment in time, I feel very, very confident in being able to do that. That's money I can afford to put in right now. Now, my total interest earned would have been 1.9 million, and my investment in total would be worth just under 2.5 million. Now, that's amazing. That is all tax-free. That is, you know, I don't have to pay any money of that to the government, all in my pocket, because I've been working on my ISA, which is all tax-free profits. So there you go, it's a win-win, right? So this is definitely something you should be looking into. And even if you just start really, really small, obviously do it safe, don't go crazy, don't be dumping in your entire life savings into these funds, because like I said, they go up and down, right? It's the stock market. Do your own research. Go on YouTube like I did, have a read, and kind of make your own informed decision on whether it's right for you. Use this website, have a play around. I played around in this for a few hours before I actually started to kind of figure out exactly how much I wanted to be investing and you know, where I saw this potentially going for myself. So I hope this helped, and we'll jump back into my camera. So as you can see, it's pretty nuts, right? I know £20,000 isn't a small amount of money, but even if you was just getting £3,000 or £4,000 a year into that ISA, do it! It really turns into something quite big when you leave it in there for a few years, right? So it's definitely something that you should be looking at doing, and it kind of gives you that solid structure and that safety net to fall back on, to know, hey, look, don't worry, I have this money here for a rainy day, and you know, I'm not going to be left up shit's creek without a paddle, right? So let's jump into my Vanguard account. I want to show you my investments, where I put my money, the returns that I've seen, you know, how much dividends I've been paid out across the year, and yeah, just kind of give you a rundown on my experience. So let's do that now. Okay, cool. So we're in my Vanguard account right now. As you can see, we have £6,400 left of our ISA allowance for this year, and just over £17,000 in total in the funds. Let's break down my investments and kind of see where I'm invested in and what I've actually purchased into. So I'm in FTSE emerging markets, FTSE All World high dividend, FTSE All World, and the S&P 500. Now the S&P 500 is probably the most popular. Now a lot of you guys are probably asking, you know, I don't want to do this because I don't know when the best time to buy it is. Should I wait for a big dip or something like that? Now, luckily, I started looking into this at the beginning of lockdown when the world started to go into a turmoil with coronavirus. So I actually managed to buy my first position in late March, where everything was kind of going to crap. Now, obviously, this doesn't really matter, because over the course of 30 years, when you're putting this money in, you're not going to be sat there timing it perfectly and buying at the lowest point, because it just doesn't matter, right? You average cost in, and you just start buying across the year. So you average cost in, and it doesn't matter where you put your money. Because you're there for the long term. You're not there to be pulling out in a week's time, right? I've just been putting money in each month and kind of going from there. But this is kind of interesting, right? So like I was saying, how it averages out to be sort of 10% a year. 31st of December 2015 to 2016, the fund grew by 32%. The year following was 8.8, 8.9. The year after that was negative 1.76, and then the year following 24.54, and the year after that 11.83. So if you work that out as an average, it literally does come to around 10%. So let's go back to the investments as well and kind of see performance, how much money we've made this year, how much dividends have been paid out, and that sort of thing. Now, in total, I've contributed £15,100 into my Vanguard ETFs. And that has returned me a total of £2,000. We can come into individual investments here, break that down, and see which ones have done the best for me. Obviously, I've got 5,670 into FTSE All World, and that has actually returned me £1,000. And we have the S&P 500, which I have just under £7,000 in, and that has returned £740. So as you can see, I kind of try to diversify the ETFs as much as possible. I don't read into it too much. I kind of just follow what everyone else is doing. And obviously jump into the S&P 500 because it's the biggest one, probably the most well-known and the most popular. And then I just kind of go from there. If we break down and look at the individual calculations, we can see that this year I've earned £111 in dividends, which, if you don't know, is essentially companies' profits that are then paid out to their shareholders year on year. So, you know, some companies pay out dividends every month. Some companies will pay out dividends every quarter. In total, I've earned £111 from that, and that dividend just gets reinvested back into my portfolio. So I don't ever see it. It just gets put back in. And obviously that power of compound interest starts to work its magic, right? So yeah, I started in March. So yeah, it's actually been 10 months since I've actually started. And we've earned 2k off of it, right? Now, it doesn't sound like a lot. Obviously, I'll have to put in 15k to do that. But like I said, I'm in it for the long run, and I'm not expecting to be a millionaire overnight with this. This is just like a really safe option where I know when I'm 40 years old, 50 years old, 60 years old, whatever, if I'm still alive, touch wood, we're all good, and we don't have to be worrying about any money problems because we did smart options and we made some smart decisions in our younger years. Now, obviously, I'm starting this late. I'm 26, but if you guys started when you was 18 or 20, right, you've got them extra years, and them extra years when it comes to compound interest really make a difference. You'll see when you use that calculator As you get down to like the 25th, 26th, 27th year, that interest is just snowballing so hard. And that's when you really start to see a huge growth on your portfolio. But yeah, I hope this has helped. We'll go back to the camera now, and I hope it's been a little bit insightful in terms of what you can expect to do and how Vanguard kind of works. So look guys, I hope that video was helpful in some sort of way. When it comes to investing and getting into the stock market, it can seem really daunting. And I think investing into individual stocks is pretty daunting because it requires a level of sort of research to be done and kind of understanding them individual companies and how they're structured, right? That's not to say you shouldn't get into it, because obviously there is money there. As I discovered early last year, ETFs are a great way of creating that structure. Now for me, that's all it is. I'm not looking to make money overnight. I'm not looking to become Bill Gates tomorrow, but I am looking to give myself some sort of financial security and a place where I can just store money for the future. Obviously this money isn't tied away. I can't not touch it. So if anything did go wrong, I can pull this money out, tomorrow, but it's just there to sort of maximize the money I could be making, right? If I'm not in it, I can't win it. Yeah. So, having that ETF is just allowing compound interest to take hold and really just ensure that I've got a healthy bank account when I'm an old man. Definitely do your own research on it. Definitely have a look. There's loads of guys on YouTube that go really in depth with it. The likes of Graham Stevens. Check out some of his videos. Being in the UK, I use Vanguard, but I know Vanguard is also in the US. But I think you've got a lot more options in the US in terms of who you can use as your broker. For me, I use Vanguard and I've had a pretty good experience with it so far. Like I said, I'm in here for the long haul, and I can come back to this in a year's time and kind of give you an update video on where we're at and how much that 40k of 2 years worth of ISAs have made me, and where the portfolio is sitting. So this was a bit more of a serious video compared to my other videos, but I did want to do this one because it's a really important time for everyone to understand the importance of ensuring you're safe in the future. Look at this coronavirus. There's companies that have been wiped off the face of the earth now that have been around for 20 years.
I declare bankruptcy!
Now, that's not saying that this has anything to do with that, but ensuring that there's a backup plan there or some sort of safety net for you to fall back on is definitely important. Things can change pretty quick in this world, and we need to be ready. Okay, so yeah, I hope this helped. If it did, please leave a like on this video. It means so much and it helps me show this video to more people. You know already how much it pleases the YouTube algorithm. And if you haven't already, hit that subscribe button. And in the next couple of weeks, I'm going to be doing a bit of a crazy challenge where I invest £10,000 into the stock market and we kind of see the results after a week. So be sure to tune in for that, and I appreciate you watching this video if you've made it this far. And again, this wasn't financial advice, all right? You heard it from me first. Catch you later, guys. Have a good one. See you in the next video.